Hi there, Serial Trader here. Let's have a look at weed and CGC, as I've just recently opened a trade. Actually, yesterday I opened a straddle in CGC, but we'll get to that in a bit. First, I'll just do the wave analysis here for weed. So from the top, it looks like we have a 1 down, 2 up, and then a 1, 2, 3, 4, 5 down for an extended wave, 3 down. And now potentially working an A, B, C, D, E, triangle wave 4, possibly complete. And now ready to thrust down on wave 5. And that could be for a larger A or a larger wave 1 down. But that should be a fairly good bottom to get a significant bounce up in either a B wave or a second wave. It may not be, well, in this interpretation, it wouldn't be the bottom, but it would be a significant tradable bottom to get a huge move upwards, big retracement of this overall decline. And with that being said, I have the triangle thrust measurement going off of this structure, and that would get us down to roughly 41.34. I also have the reverse fib extension of the A wave of this wave 4, and the 1.382 objective gets us to 45.24, and the 2.0 objective gets us to 40.59. So pretty low levels, but given the recent market volatility and also just the volatility and the decline that weed itself has experienced, this really isn't hard to envision playing out, right? Now that being said, I've given my primary wave count for weed because it's clear. Let's switch over to CGC because that's where I've actually put on the trade. Now CGC, well, I'll show you something. So on weed, I had it labeled like this, just A up, B down, C up, D down, and then E up, and now ready to come down in our thrust down, right? Now the problem on CGC, and even though they're the exact same company, there's slightly different price data between the this one, the US listed ticker, and then the one I just showed you before, the Canadian listed ticker. So on the US listed ticker, I can't label this a D wave because D went lower than B. So B made it extreme at 37.60, and D actually went as low as 37.38. So even though it looks almost identical, see, weed respected the B made a low at 48.94, and D made a higher low at 49.25. So this labels just perfectly, whereas on CGC it does not. So I mean, I could let it slide since you can either trust the price data on weed more or the one on CGC more. You could definitely label it like this and probably still be okay. But let's just, to play devil's advocate and be really picky, let's just follow the rules and guidelines here. So this, to make it correct, you'd have an A up, A, B, C down for B, a D up, right? And then you'd have to have your C down, C up, and then you have to have your D down, and then another little bounce in E, and then come down in this triangle thrust. It wouldn't really change much as far as what we're expecting here, but just a little nuance in the labeling. But there's also another possibility. Now, I didn't show this on weed because it just looks quite clear, and whenever you have a triangle after a strong trending move, you're likely to continue when you break out of it in the same direction as the dominant trend, which in this case is to the downside. But triangles can be tricky, and because of that, now let me just play this for a second. So what if we just have an A up? This is a triangle wave B, and then we're gonna have a C up. And let me just get the degree down. Yeah, this should probably be good. And then we have this as one lesser minuet. Okay. So it's possible that we just have, and let me label this for you. Just change this around. A up, B down. Actually, no, it would have to be a three-way move down for A. And then we go up in B, come down in C. Sorry, then have a D, then have an E. Okay, A, B, C down for A. Move up in B, move down in C, up in D, down in E, and that will complete this overall triangle for wave B. and then you'd have a wave C up, thrust up, so a more complex ABC up, and then come down in a fifth wave. So this is possible. I'm not favoring this interpretation, okay? I think it's more likely we just have a plain old triangle here and not an A triangle B and C up. But either way, so even in either of these scenarios, there's still a triangle forming, okay? And it's still going to have a thrust in one of two directions. Now, even though we're favoring the downward direction, you know, we're still entertaining the possibility of an upward direction. That's why I bought the straddle, and we'll get to that in a moment. But, so this is just the triangle thrust measurement in either direction. So if we thrust up, we'd be looking at 45.71 on CGC. If we thrust down, the target would be 31.43 for the measurement. Okay, and then, well, let's have a look at this. If we did our Fibonacci reverse fib here on A, so to the downside, we'd have our 1.32 objective at 34.45, and then our 2.0 objective 30.88. And if that's not correct, and say we actually need to do a reverse fib off of our triangle wave B for our wave C target, we would do something along these lines. Okay, I've just made up where wave E would end and kind of used it as a basis to do a reverse fib, but just to get an idea. Upward target 44.23, so let's call it 44, and the 2.0 objective would get above that thrust measurement at, you know, 47 or so. So here we have some levels to be looking for. Now, and you've noticed I've taken all the other wave labels off this chart just to focus on this pattern hand, this triangle hand. So I'll get rid of this because I still favor that we just have a plain triangle in play here, right? And sorry, let's get to the original labeling. Yes, B, C, D, E. So this is still the most favorable interpretation, especially based off of the weed chart, since it's very clear on that one. And, you know, likely for a larger wave 4 and then a wave 5 down. But let's just go with the Thinkorswim candlestick, or sorry, not candlestick, Thinkorswim risk profile chart here for a moment. So I bought 150 CGC calls and 150 CGC puts. They both expire on the 2nd of November 2018, so next Friday. One was bought for 205, the calls. The puts were bought for 194, so roughly a $4 net debit, okay? So it means at expiration, to break even at expiration, it needs to move $4 in one of two directions, okay? And given that our upward break-even price at expiration is 42.50, and our downward break-even price at expiration is 34.50. And obviously, if we get a big move Monday or Tuesday or whatever, well before the Friday expiration, it takes a lot less of a move for this to start making money. In fact, it basically starts making money and gaining delta almost immediately with any kind of reasonable movement. But obviously, time is the enemy, not price in this case. We're actually looking for a big price movement in either direction. The enemy of this straddle, especially short-term straddle like this, is time decay. So we need to see the move quickly. You know, Monday or Tuesday would be absolutely preferred. I wouldn't want to hold it much past that because time decay would start becoming a large factor at that point. But I think, you know, given the recent market volatility and also the volatility of wheat and CGC themselves, it's very, very likely we get more than a $4 move next week. In fact, the $4 range for a week on CGC is unusually low, okay? But options are priced on, you know, the trailing volatility. So because we've contracted and volatility has died down on CGC, the options got cheaper, which is actually advantageous because, I mean, option prices aren't based on technical analysis. There isn't someone looking at this chart and saying, oh, we got a contracting triangle, we're about to explode out in one of two directions, we better jack up the prices on these options. That's not what they do at all. They have mathematical models based on, you know, trailing volatility and other factors that they use for option pricing. So it actually leads to you getting cheaper options right when they probably should be more expensive because you're about to have a breakout. So that's an edge you get in the trade like this. Now, this level here, That's the, I believe I set that as the break-even price at expiration. Yeah, that's the 42.50. And then down here we have the 34.50, which actually coincides quite nicely with one of our fib targets. Now, obviously, you don't have to try and hold this to get the full move up or down. If you go back here, I mean, if we get a move to 41 to the upside, we're looking at, let's see here, we'd be looking at, oh, geez, yeah, over $10,000 profit there. If we get a move down to say, 36, 35.50, we're looking at $8,000, $10,000 around that 35 mark, 35.40. So we don't need the full move. Sorry, that's not what I was looking at. We don't need the full move as long as it happens quickly here, which is it's likely to, because we've contracted so much. This range is ready to break. We don't need to actually try and sit through the entire breakout. I mean, you can if you're brave, but for me, if I see, $10,000 or so, or $20,000, and we've moved a good portion of the range that I expected to move, and it's Monday or Tuesday, I'll take that profit right away. I don't care about trying to squeeze every last ounce of profit out. I'm just trying to make money. I'm not trying to make the absolute maximum money, because if you try and make the absolute maximum money, you hold on too long, and then you give it all back or lose. So that's my game plan there. But I just thought we did a big triangle trade quite recently there in CGC. I'm not necessarily expecting that good of an outcome this time, although we have a very similar setup. It's just on a shorter time frame. So this triangle took, basically less than a week of trading to form. In fact, let's see here. When did this extreme in price occur? October 23rd. Yeah, so it basically formed in about 4 trading days so far. And I think it'll resolve quite early next week, Monday or Tuesday. So yeah, that was my game plan. Just do a big straddle, take some quick money when it breaks out, and then get out. It's a nice trade setup. I mean, it's a big position, but it's going to be strategically followed up on. So yeah, if you did absolutely nothing and it just stayed right on the strike price you bought it at, 38.50, we're looking at $60,000 of risk. But I would never see it to that point. I mean, the whole thing is this needs to break out right away, because it looks like it's going to. If it doesn't break out, and we're getting towards the end of the trading day on Tuesday, and a little time decay is kicked in, I'll just close the thing and take some relatively minor losses. I'm not going to see it to Friday and have it just flatline and lose $60,000. That's not the strategy of this trade. The strategy is get in for that quick break that looks imminent, take your profit and get out. But the nice thing is it doesn't matter which way it breaks. It just has to break out, which looks very likely. Obviously, my overall analysis on weed is favoring a downward breakout. But it doesn't matter. If we break out in that other scenario I showed here, the A up, triangle B, C up, it's still going to work. So yeah, I just thought I'd highlight that. Now, if it just breaks right away on Monday, you're not going to have an opportunity to jump in on this if you're so inclined to. But if Monday we open and we're still within this fairly tight range here, you'll definitely have an opportunity to open the straddle for probably similar or possibly even a better price than I did and try and play this. Now, the reason I entered this Friday before the close is because, well, what if it actually has a big move just on the open on Monday and we start our breakout right off the open? That's certainly possible. And because of that, I wanted to get in over the weekend and not potentially miss out on that. And also, I just thought that, okay, a $4 straddle for a name like this, the way it has moved and will likely continue moving, I thought that was a pretty attractive price for an entire week's exposure to it. So I'll leave that with you. Hopefully you can do something with that. Serial Trader signing off.